So let's talk about some specific types of income. So interest income. I think we're all probably familiar with what interest income is. So it's payments for the use of your money, right? So that's what the bank is doing when you deposit money into a bank and they pay you interest. They're taking that money and they're using it. They're lending it to other people, but then they're paying you in exchange for letting them use your money. So interest income, and this shows up on the Form 1040, line 2. And when it gets reported, it's reported on what's called a Form 1099 INT at the end of the year. So all of the interest that has been paid by one payer is reported on one form. If it's under $10, they generally do not report it on a 1099. It doesn't mean that you do not have to report it on your tax return. It just means that they don't have a requirement to send you a 1099 if the total for the year was under $10. So if you've received interest in the past and you didn't get a 1099, that could very well be the reason why you didn't get a 1099. It's just because it wasn't enough. So what else do I want to say about this? So some of the things that they talk about in the appendix I said we're just really not even going to cover here have to do with some more complex interest issues with regard to below market rate loans, shareholder loans, and that sort of thing. We're really not going to discuss all that. We're going to talk about some of the more common types. So interest on U.S. savings bonds. So Series EE and Series E savings bonds, I think I would include Series I in there as well. So when you purchase savings bonds, these series of savings bonds, you purchase them. So if you buy a $500 bond, you actually pay $250 for it. And then at its maturity date, whatever that is, it's worth the $500. So the interest the amount that it increases in value is considered to be interest income. So when somebody sells that bond, when they go and they cash it in, then what they report is the difference between what they paid for it and what they actually received is interest income. And then that gets reported on line 2 of the Form 1040. So an example here, we got Alina. She purchased a $1,000 face value Series EE savings bond for $500. January 1st, 2024, the bond earned interest at a rate of 6% in 2024. At year end, the bond had a face value of $530. So that's 6% of $500. The $30 is added to the face value of the bond, but that's considered to be interest. So at that point, she doesn't do anything, though. If she still has the bond, she doesn't have to report any of that interest. She can choose to report it if she wants, the $30 of interest, and then instead of at the end of the term of the bond, you're reporting $500 of interest, you're reporting $30, every year until it matures. She may choose to do it that way because there's less of a tax hit. You don't feel it quite as much. And so that's what they're talking about here. So she can elect to report the $30 in 2024. If she does, she must report all future interest income on the bond in the same manner. So if you do that in the first year, you have to do it every year that you own the bond. So tax exempt, there's another kind of bond, the I bonds. They actually don't. You buy them for their face value, and then they earn a variable rate of interest. I stands for inflation. They're inflation-adjusted bonds, so they will always earn at least the rate of inflation is what they will always earn. So you're kind of protected from inflation with those bonds. So certain income, though, certain interest income is not taxable. Tax-exempt interest does not have to be, it is reported on the tax return. Remember, if you can kind of visualize on that tax return, remember there are 2 columns, and maybe I just pull them up so you can see, because you're probably not quite to the point where you can visualize it yet. Maybe not. Let's see. All right, so you see we've got two columns here. We've got taxable interest and we've got tax-exempt interest. So this is what we're talking about here. Anything that would go in this box. It is reported, but it is not taxed. That's why it's on a separate column. Okay? So tax-exempt interest. So what is tax-exempt interest? Municipal bonds are a form of tax-exempt interest. Municipal bonds are bonds that are sold by municipalities, so cities, counties, smaller jurisdictions, and they're used to finance activities within that jurisdiction. So certain municipal bonds are exempt from taxation. You do not, so you earn interest on them, but you don't have to pay tax on that interest. Now, in exchange for that, usually you get a lower interest rate. So if you put your money into a certificate of deposit, you might be able to earn 5% interest, but if you buy a municipal bond, you're going to earn 4% interest. So it's a lower interest rate, but you're not paying tax on the interest that you receive. So you can exclude income on interest earned on these bonds issued by any state, possession of the U.S. political subdivision, so that would mean any county or city or any smaller subdivision, or the District of Columbia. Also, it includes municipal bonds from Puerto Rico, Virgin Islands, Guam. I think that's it. Those territories. So interest, however, is taxable if the bonds were issued for private activities such as convention centers, industrial parks, or stadiums. So if the purpose for them was to raise money for like a football stadium, then it's not tax exempt. When people purchase their bonds, their municipal bonds, they know. They've been told whether it is tax exempt or not. Let's see. Couple things I want to say about, other things I want to say about interest income. You'll notice, and I think you'll start to probably use this form in Chapter 3 with your tax return problems. There is this Schedule B where interest and dividends are reported. You don't always have to use this schedule. However, so you do have to use it if you had more than $1,500 of interest income, any interest income, received any seller-financed mortgage interest, which means you sold your home to somebody else and they're paying you over time and paying you interest on that home. Received tax-exempt interest in any amount. So if you had any municipal bond interest, you have to fill out Schedule B. Received interest as a nominee. What that means is it was your interest income, but it was reported under somebody else's name and social security number. So, for example, if you've got a bank account held jointly with your grandmother, it's under her social security number, but the two of you both received the interest from that bank account, then you would have to report it. You'd have to fill out Schedule B. You received interest as a nominee. It was reported under her social and her name, but it is your interest income. If you claimed an exclusion for interest on savings bonds, EE savings bonds issued after 1989, or Series I bonds, and we'll talk about the exclusion in the last part of this chapter, what that exclusion would be. Other instances, adjustments for accrued interest, amortizable bond premium, OID, those types of things that are they talk about in the appendix. If you had a foreign account, doesn't matter how much is in that foreign account, doesn't matter where that foreign account is, other than in the United States. If you have a foreign bank account, investment account, any type of account, or received a distribution from or was the grantor of a transferor to a foreign trust. So the reason you have to fill out that part is there's a question down here. Actually, there's a series of questions about foreign bank accounts. What they're trying to do is to capture, because your income is taxable regardless of where you earn it. If you have a bank account that's earning interest in France, you still have to report that income. If you have, and there are a lot of people that have offshore accounts that are hidden. They're supposed to report them, and it's a way to try and repatriate any of that income that is due. So there is a series of questions that are asked here about foreign accounts. At any time during the year, did you have a financial interest in, signature authority over, or a financial account located in a foreign country? If the answer is yes, there's another series of questions you have to ask based on the value of that account. If it's over a certain value, you have additional reporting requirements. So if yes, you're required to file this FinCEN Form 114, report of foreign bank and financial accounts. So this is otherwise called the FR. You have to report that financial interest. So you have a totally additional reporting requirement. If you're required to file it, you have to list the name of the foreign countries. And then another question, did you receive a distribution from, grantor, transfer to a foreign trust? If it's yes, then there's another form that you have to file. So again, they're trying to capture any foreign income that people aren't reporting, or any assets that they may own, they're trying to keep track of for foreign reporting purposes. So here's the 1099 INT. This is the form that is sent out by the banks, credit unions, such, when you have an account that is earning interest. So box 1 is for interest income. It would be reported there. Some of these other boxes that we will talk about, this we're going to talk about in Chapter 4, early withdrawal penalty. That's if you had a certificate of deposit, which with certificates of deposit, you have an obligation to keep the money in for a certain period of time. If you withdraw it before that time, there's a penalty for that withdrawal. That's reported there. Interest on U.S. savings bonds, treasury obligations, so those EE or E or H or I bonds, reported there. If there was any foreign income tax withheld from any of these amounts, that's reported there. That, again, remember we had, I think it was on your tax return problem, I don't know if it's for Chapter 2, or maybe it was one of the extra credit ones, there was a spot where there was federal income tax withheld on interest income, and so it had to be reported on page 2 of the 1040, right underneath where the W-2 withholding was reported. So that's where that would come from. And then foreign tax paid, tax exempt interest that we had talked about, so municipal bond interest or any type of interest that's tax exempt would be listed there. And then lots of other boxes for some complicated financial transactions listed there. But it can be reported directly on the 1040. You can bypass the Schedule B unless any of these apply. Okay, so 1,500 or more, you've got to fill out the Schedule B. Tax exempt interest in any amount, got to fill out the Schedule B. Okay. What is this? This is the original issue discount. I'm not going to go over that. That's part of the appendix that I'm not really going to cover. All right, so that's, there we go. So that's interest income. I'm going to do this.